Based on the historical data and forecast, Bitcoin shows a clear upward trend. The recent price action indicates a potential pullback followed by continued gains. The RSI values have fluctuated between 36.6 and 69.1, suggesting periods of both oversold and overbought conditions. The Bollinger Bands have widened recently, indicating increased volatility and potential for larger price movements. Given the forecast prices consistently above 120400, I recommend a long position strategy. We will use a combination of RSI and Bollinger Bands to optimize our entry and exit points. Our strategy involves entering a long position when the RSI dips below 30 and the price touches the lower Bollinger Band. Currently, on September 27, 2025, the RSI was 36.6 and the price was 109,600, which is above the lower Bollinger Band of 109,300. We will wait for a more significant RSI oversold signal. Once the RSI falls below 30, we will enter a long position at 108,000. The stop loss will be set just below the lower Bollinger Band at 107,500 to protect against unexpected downside moves. The initial target price will be the upper Bollinger Band, which is around 119,000. If the price reaches this target, we will move our stop loss to break even at 108,000 and consider a further target price of 125,000 based on the forecast data. This combined strategy leverages both momentum and volatility indicators for optimal risk-reward ratio. Based on the historical data and forecast, Ethereum shows a recent downtrend followed by a potential reversal. The RSI consistently dipped below 38, indicating oversold conditions, and has been trending upwards, suggesting increasing buying pressure. The Bollinger Bands have widened, indicating volatility, and the price recently touched the lower band, further confirming the oversold status. Considering this, I recommend a long position with an entry price of $4,400. A stop loss should be placed at $4,350 to protect against a potential further decline, and a target price of $4,570, aligning with the forecast and the upper Bollinger Band, should be set to capture the anticipated upward movement. To enhance the strategy, we'll incorporate RSI and Bollinger Band signals. When the RSI falls below 20, oversold, and the price touches the lower Bollinger Band, it's a strong buy signal. Conversely, when the RSI rises above 80, overbought, and the price touches the upper Bollinger Band, it's a sell signal. This combined approach aims to maximize returns by capitalizing on both momentum and volatility. The portfolio will prioritize the long position with an entry price of $4,400, a stop loss at $4,350, and a target price of $4,570, as it aligns with the current market conditions and forecast. Based on the historical data and forecast, XRP shows a potential for upward movement. The price has been fluctuating within a support of $2.97 and resistance of $3.27. The RSI indicates that the asset is currently not oversold, hovering around 57.6, but approaching the overbought level of 80. The Bollinger Bands show that the price is trending towards the upper band, suggesting bullish momentum. Therefore, I recommend a long position strategy with an entry price of $3.04. A stop-loss order should be placed slightly below the support level at $2.97 to mitigate potential losses. The initial target price is set at the resistance level of $3.27, aiming for a quick profit. To refine the strategy, I suggest incorporating RSI signals. If the RSI dips below 30, indicating an oversold condition, we can enter a long position at $2.97 with a stop loss at $2.95 and a target price of $3.11. Conversely, if the RSI reaches 70 or above, suggesting an overbought condition, consider taking profits or reducing exposure. Given the forecast prices, a second entry point could be considered at $3.02 on October 5, 2025, with a stop loss at $3 and a target price of $3.14. Combining these strategies, we can optimize returns while managing risk effectively. Based on the historical data and forecast, BNB demonstrates a strong uptrend with significant momentum. The RSI consistently above 60 indicates bullish sentiment, peaking above 80, signaling a potential overbought condition. However, the forecast for the next week predicts continued price increases, reaching $1,220. Considering the recent overbought conditions and the potential for a pullback, I recommend a strategy that combines RSI and Bollinger Bands. We will initiate a long position when the RSI dips below 60 and the price touches the lower Bollinger Band, indicating a potential buying opportunity. Specifically, enter a long position at $1,130 when the RSI falls below 60 and the price touches the lower Bollinger Band. Set a stop loss at $1,080, just below the recent support level, to limit potential losses. The initial target price is $1,180, aligning with the forecast and the upper Bollinger Band. If the price continues to rise, a second target price can be set at $1,220, based on the forecast. This strategy aims to capitalize on the overall uptrend while mitigating risk through strategic stop-loss placement and utilizing both RSI and Bollinger Bands for confirmation. Based on the historical data and forecast, Solana shows a recent downtrend followed by a slight recovery. The RSI consistently fluctuated, dipping below 45, indicating oversold conditions, before rebounding. The Bollinger Bands have been widening, suggesting increased volatility. The support price remains steady at $220, while the resistance price is $247. Considering the forecast for the next week, with prices ranging from $224 to $237, I recommend a moderately bullish strategy. We will enter a long position when the RSI crosses above 50, aiming to capitalize on the potential upward momentum. Specifically, I suggest entering a long position at $224. Given the recent volatility and the support level at $220, a stop loss should be placed at $220 to limit potential losses. The initial target price will be $233, aligning with the forecast high and a reasonable profit margin. If the price reaches $233, we will reevaluate the situation. If the upward trend continues, we can adjust the target price to $237, capitalizing on the forecast. This strategy combines technical indicators with price forecasts to maximize potential returns while managing risk. Based on the historical data and forecast, Dogecoin shows a slight upward trend. The RSI consistently remains above 40, indicating a bullish momentum, and the forecast prices suggest a continued increase. Considering the support price of $0.242 and resistance price of $0.282, we will implement a strategy combining RSI and Bollinger Bands. The RSI is currently around 56.3, which is not in the oversold zone, but not significantly overbought either. The Bollinger Bands are widening, indicating increasing volatility and potential for price movement. We will enter a long position at $0.258, placing a stop-loss order at $0.242, just below the support level, to mitigate potential losses. Our target price will be $0.276, aligning with the highest forecast price and approaching the resistance level. This strategy aims to capitalize on the predicted upward trend while managing risk with a conservative stop-loss. If the price breaks above the $0.276 target, we will reevaluate the situation and potentially adjust our strategy. This portfolio combines the RSI and Bollinger Bands to maximize efficiency, providing a balanced approach to potential high returns. Based on the historical data and forecast, TRON shows a slight upward trend, consolidating between the support of $0.337 and the resistance of $0.362. The RSI indicates that the asset is currently in a neutral range, fluctuating around 50, suggesting neither overbought nor oversold conditions. The Bollinger Bands show that the price is currently near the middle band, with the bottom band approaching the support level of $0.337. Considering these factors, I recommend a long position strategy with an entry price of $0.341. A stop-loss order should be placed just below the support level at $0.336 to limit potential losses. The target price for this trade should be set near the resistance level at $0.351, aiming for a potential gain of $0.01. To refine this strategy, we can incorporate the RSI. If the RSI dips below 30, indicating an oversold condition, we can consider adding to our position at $0.333, with a stop loss at $0.332 and a target price of $0.343. Conversely, if the RSI reaches 70 or above, signaling an overbought situation, we should consider closing our position and re-evaluating the trend. This dynamic adjustment based on RSI will help optimize returns and manage risk effectively. Based on the historical data and forecast, Wrapped Beacon ETH has shown a fluctuating trend with recent upward momentum. The RSI indicates periods of oversold and overbought conditions, while the Bollinger Bands suggest potential volatility. Considering these factors, I propose a combined strategy incorporating RSI and Bollinger Bands for optimal returns. We will initiate a long position when the RSI dips below 30, signaling an oversold condition, and the price touches the lower Bollinger Band. For example, when the RSI is 30.9 on September 25, 2025, and the price is $4,190, we enter a long position at $4,190 with a stop loss at $4,150, aiming for a target price of $4,800. The forecast data suggests a continued upward trend, with prices potentially reaching $5,010. To capitalize on this, we will adjust our target price based on the upper Bollinger Band. If the price approaches the upper band, we'll consider taking profits incrementally. For instance, if the forecast price reaches $4,740 on October 4, 2025, and the upper Bollinger Band is $5,140, we maintain the long position, adjusting the target price to $4,800. This combined RSI and Bollinger Band strategy, with dynamic stop loss and target adjustments, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Chainlink has shown a slight upward trend with periods of consolidation. The RSI consistently fluctuating around 40 to 50 suggests a neutral to slightly bullish momentum. The Bollinger Bands indicate periods of volatility, with price occasionally touching the lower band, signaling potential oversold conditions. Considering these factors, I recommend a strategy that combines RSI and Bollinger Bands for optimal returns. We will initiate a long position when the RSI falls below 35 and the price touches the lower Bollinger Band. For example, on September 27, 2025, the RSI was 34.7 and the price was $20.2. We will enter a long position at $20.2 with a stop loss at $19.8, just below the lower Bollinger Band. The target price will be set at $23.6, the resistance level. To refine the strategy, we'll incorporate a trailing stop loss based on the upper Bollinger Band. As the price rises, the stop loss will gradually move up, locking in profits. For instance, if the price reaches $22, the stop loss will be adjusted to $21.5. The portfolio will be dynamically adjusted based on the forecast data. If the forecast indicates a downward trend, we will reduce our position size or exit the trade. If the forecast is bullish, we will increase our position size. This adaptive approach, combining technical indicators with market sentiment, should provide high returns while managing risk effectively. The final target price is $23.6. Based on the historical data and forecast, Avalanche shows a slight upward trend, although with significant volatility. The RSI consistently fluctuates, dipping below 50 and occasionally approaching the oversold level of 20, while the Bollinger Bands indicate periods of high and low volatility. The price action has been testing the support level of $30, and the forecast suggests a continued consolidation around $31.6 to $32.6. Considering this, a combined strategy incorporating RSI and Bollinger Bands is recommended. We will implement a swing trading strategy, focusing on short-term price movements within the established range. Our strategy involves entering long positions when the RSI dips below $30 and the price touches the lower Bollinger Band. For example, on September 27, 2025, the RSI was $47.1, and the price was near the bottom of the Bollinger Band at $23.7. We will enter a long position at $23.7 with a stop loss set at $22 to protect against unexpected downward movements. The initial target price will be $30, aligning with the established support level. If the price reaches $30, we will consider adjusting the stop loss to break even and potentially setting a secondary target price at $33.8, the resistance level. This combined approach leverages both momentum and volatility indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Injective shows a slight upward trend, bouncing between the support price of $12.5 and the resistance price of $13.6. The RSI fluctuates, dipping below 40 on several days, indicating oversold conditions. The Bollinger Bands show periods of contraction and expansion, suggesting volatility. My strategy will be a combined approach utilizing RSI and Bollinger Bands for optimal returns. Initially, I will implement a long position when the RSI falls below 35, aiming to capitalize on the oversold conditions. Specifically, I recommend entering a long position at $12.9. The stop loss will be placed just below the support level at $12.5 to limit potential losses. The initial target price will be at the resistance level of $13.6, providing a reasonable profit margin. If the price breaks through the resistance, I will adjust the target price to $13.8, aligning with the forecast data. This combined strategy leverages both technical indicators to maximize potential gains while mitigating risks. Based on the historical data and forecast, Trust Wallet shows a clear upward trend, with the price consistently testing and breaking through resistance levels. The RSI values have fluctuated significantly, reaching overbought conditions several times, but the overall trend remains positive. The Bollinger Bands also indicate volatility, with the price frequently touching or crossing the upper band, suggesting strong buying pressure. Considering the forecast prices for the next week, which are all above the recent closing price, I recommend a long position strategy. The entry price should be $1.48, aligning with the first forecast price. The stop loss should be set at $1.43, just below the initial forecast price, to protect against a sudden reversal. The target price should be $1.55, based on the highest forecast price for the week, providing a reasonable profit margin. To refine this strategy, we can incorporate the RSI and Bollinger Band signals. When the RSI dips below 20, oversold, it indicates a potential buying opportunity. However, given the current upward trend and overbought readings, we will focus on the breakout strategy. If the price breaks above the upper Bollinger Band, it signals a continuation of the upward trend. Therefore, the combined strategy will be to enter a long position at $1.48, with a stop loss at $1.43 and a target price of $1.55. This approach leverages the positive momentum and incorporates risk management techniques for a high-return investment. Based on the historical data and forecast, IOTA shows a potential for upward movement. The price has been fluctuating within a range between $0.16 and $0.192, with a recent upward trend observed in the last few days. The RSI indicator consistently remained below 50, indicating a potential for an oversold condition and a possible price reversal. The Bollinger Bands show that the price is approaching the lower band, suggesting a potential buying opportunity. Considering these factors, I propose a long position strategy with an entry price of $0.182, a stop-loss price of $0.178, and a target price of $0.198. This strategy aims to capitalize on the anticipated upward trend and the potential for a bounce from the lower Bollinger Band. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. When the RSI dips below 30, indicating an oversold condition, and the price touches the lower Bollinger Band, it's a strong buy signal. In this case, we enter a long position at $0.182. The stop loss is set just below the lower Bollinger Band at $0.178 to protect against a potential downward reversal. The target price is set at $0.198, aligning with the forecast and the upper Bollinger Band, providing a reasonable profit margin. This combined approach leverages both momentum and volatility indicators for a robust and high-return investment strategy. Based on the historical data and forecast, Curve DAO has shown considerable volatility, with support at $0.73 and resistance at $0.821. The RSI has fluctuated between 34.9 and 55.3, indicating periods of oversold and overbought conditions. The Bollinger Bands have widened and narrowed, reflecting changes in market volatility. Considering the recent upward trend and the forecast prices hovering around $0.732 to $0.776, I recommend a moderately bullish strategy. We will initiate a long position when the RSI dips below 35, indicating an oversold condition, with an entry price of $0.636. The stop loss will be set just below the support level at $0.63 to protect against potential downside risks. The initial target price will be the resistance level at $0.821, aiming for a substantial profit. To refine the strategy, we'll incorporate Bollinger Bands analysis. If the price breaks above the upper Bollinger Band, indicating strong bullish momentum, we'll adjust the target price to $0.85. Conversely, if the price falls below the lower Bollinger Band, suggesting a potential reversal, we'll tighten the stop loss to $0.65. The RSI will serve as a secondary confirmation. If the RSI reaches 80 while the price is near the resistance, we'll consider taking partial profits at $0.821 and moving the stop loss to break even. This layered approach, combining RSI, Bollinger Bands, and support/resistance levels, aims to maximize returns while managing risk effectively. The final portfolio will be 60% based on RSI, 30% based on Bollinger Bands, and 10% based on support and resistance. Based on the historical data and forecast, Eigencloud, Eigenlayer, shows a generally upward trend with recent volatility. The support price consistently remains at $1.81, while the resistance fluctuates. The RSI has been oscillating around 60, occasionally dipping into oversold territory below 45 and nearing overbought conditions above 65. The Bollinger Bands indicate periods of increased volatility, with the price frequently touching or crossing the upper and lower bands. Considering these factors, I recommend a long position strategy. We will enter a long position at $1.83, coinciding with a dip towards the lower Bollinger Band and near the support price. The stop loss will be set at $1.78, just below the support level, to mitigate potential losses. The initial target price is $2.01, aligning with the forecast price and the upper Bollinger Band. To enhance the strategy, we will incorporate a trailing stop loss mechanism. Once the price reaches $2.01, we will adjust the stop loss to $1.9. If the price continues to rise, we will further increase the stop loss to $1.94. The final target price is $2.08, based on the highest forecast price. This strategy combines technical indicators like RSI and Bollinger Bands with support and resistance levels and incorporates a trailing stop loss to maximize profit while managing risk. This approach aims to capitalize on the anticipated upward trend while protecting against unexpected downturns. Based on the historical data and forecast, Immutable shows a slight upward trend, bouncing between a support of $0.685 and a resistance of $0.796. The RSI fluctuates, but generally stays within the 50 to 70 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increased volatility. Considering this, I propose a moderately bullish strategy. We will initiate a long position when the RSI dips below 50, aiming to capitalize on potential rebounds. Specifically, enter a long position at $0.738, with a stop loss placed just below the support level at $0.685. The initial target price will be the resistance level at $0.796. To further refine this strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band, it signals a potential buying opportunity, aligning with the RSI strategy. If the price reaches the upper band, it indicates a potential profit-taking point. Therefore, if the forecast price reaches $0.824, which is above the upper Bollinger Band, we will take profit at $0.824. The portfolio will prioritize the RSI strategy as the primary signal, using the Bollinger Bands for confirmation and setting profit targets. This balanced approach aims to capture gains while mitigating risk through strategic stop-loss placement. Based on the historical data and forecast, BNB demonstrates a strong uptrend with significant momentum. The RSI consistently above 60 indicates bullish sentiment, peaking above 80, signaling a potential overbought condition. However, the forecast for the next week predicts continued price increases, reaching $1,220. Considering the recent overbought conditions and the potential for a pullback, I recommend a strategy that combines RSI and Bollinger Bands. We will initiate a long position when the RSI dips below 60 and the price touches the lower Bollinger Band, indicating a potential buying opportunity. Specifically, enter a long position at $1,130 when the RSI falls below 60 and the price touches the lower Bollinger Band. Set a stop loss at $1,080, just below the recent support level, to limit potential losses. The initial target price is $1,180, aligning with the forecast and the upper Bollinger Band. If the price continues to rise, a second target price can be set at $1,220, based on the forecast. This strategy aims to capitalize on the overall uptrend while mitigating risk through strategic stop-loss placement and utilizing both RSI and Bollinger Bands for confirmation. Based on the historical data and forecast, Wormhole demonstrates a potential for upward movement. The price has been fluctuating within a range, but the recent forecast indicates a positive trend, with prices expected to reach $0.131. The RSI values, while mostly above 50, have not consistently reached overbought levels, above 80, suggesting there's still room for appreciation. Considering the Bollinger Bands, the price has been nearing the upper band recently, indicating bullish momentum. Therefore, I recommend a long position with an entry price of $0.117. Place a stop-loss order at $0.106, coinciding with the support level, to limit potential losses. For the target price, I propose $0.129, aligning with the forecast high and the upper Bollinger Band. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk. The RSI suggests the asset is not overbought, allowing for further price increases. The Bollinger Bands confirm the upward trend, and the support level provides a clear stop-loss point. This approach balances potential gains with risk mitigation, suitable for a high-return investment strategy. Based on the historical data and forecast, FLOKI shows a slight upward trend, with the price fluctuating within a defined range. The RSI consistently hovers around the midpoint, indicating neutral momentum, but recently climbed above 50, suggesting a potential shift towards bullish sentiment. The Bollinger Bands have been widening, indicating increased volatility. The forecast data projects a continued upward trajectory, with prices moving towards $0.0000990. Given this analysis, I recommend a long position strategy. Entry price should be set at $0.0000904, coinciding with the first forecast price. A stop loss should be placed at $0.0000858, just below the lower Bollinger Band to mitigate potential downside risk. The target price should be $0.0000990, aligning with the upper forecast price and the upper Bollinger Band. To refine this strategy, we can incorporate the RSI indicator. If the price dips to $0.0000880 and the RSI falls below 30, consider entering a long position at $0.0000880 with a stop loss at $0.0000840 and a target price of $0.0000990. This RSI-based entry provides a more precise signal when the asset is oversold. Combining the forecast data with the Bollinger Bands and RSI will provide a robust and adaptive investment strategy for FLOKI, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, PancakeSwap shows a clear upward trend, particularly with the recent surge to $3.63 and the forecasted prices continuing to climb. The RSI consistently moves above 50, indicating bullish momentum, and occasionally reaching overbought territory above 70. The Bollinger Bands also suggest a positive outlook, with the price frequently touching the upper band. Considering these factors, I recommend a long position strategy. We will enter a long position at $3.17. To manage risk, the stop loss should be set at $3.12, just below the recent low. The initial target price is $3.63, aligning with the recent high and the forecast. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI dips below 30, indicating an oversold condition, we will consider adding to our position at $2.19. The stop loss for this additional entry will be $2.1. If the price touches the lower Bollinger Band, it could signal a buying opportunity, with an entry price of $2.19, a stop loss at $2.07, and a target of $2.6. The primary target remains $3.81 based on the forecast. This layered approach allows for capitalizing on potential pullbacks while maintaining an overall bullish stance.